times we had. I see it now, I see it now. Real love, now I'll break through to show to you that I'm more good than I am bad. I'll work it out, I'll work it out. And I'll be somewhere that you need me, and I'll be holding my breath, waiting for you to show.
What's up, everybody? What's going on, guys? Get it started in a second. Hopefully everyone is doing well. I have just give me a quick audio check. All right, so we got a handful of people showing up on a Saturday. I appreciate it. It's a really rainy day here in New York. My wife started a yeah, I'm sure many of you guys know, she started a mobile cocktail and catering company. It's based out of one of the horse trailers that we owned. She totally reconverted it. It's sick. It's a full bar. And she has a wedding today. So she works from, not to get into specifics, but where we live. So she's taking care of a 200-person wedding in the rain. So I have the afternoon to myself. I have to go and buy my brother a birthday present. And that's it. And maybe do some trading. So, sounds good. Cool. So, how is everybody doing? Who do we have in the chat? Jimbo, Mahale, CryptoJet, Cornholio, Jason, X Factor. What's up, Dave? Hopefully your vacation is going well. Thomas, Ronan, Christopher. Thank you guys for coming in. So, it's going to be a new format. And just right from the get-go, just as a reminder. So let's switch to the new format screen and make sure the sound works. Okay, sound work? You guys can see me? Hey? Cool. Sound still work? Where'd the chat go? Let's see if there's a little bit of a delay, and then we'll get to it. So when I change the screen, can you hear it? Sound still on. It looks like it's on. Same sound though, more importantly. Cool. Good afternoon. So I said a few words in the beginning. Just changed the screen. We're going to be testing out a new format. So this is exciting. So sound is good. Awesome. Cool. So let's switch back. Go over the good stuff in the beginning. Just as a reminder. All right, none of this is, I'm still gesticulating towards the screen as if you guys can see me. So just as a reminder, none of this is financial advice. This is for entertainment purposes only. We're going to try to keep this as entertaining as possible because I can imagine that many people are in a state of fear and uncertainty and doubt and, lost some money and, is the crypto market going going down. So we're going to try to keep it as entertaining as possible, because I think that I think everyone can use a little bit of that energy. But again, just my opinion. From the get-go, which you should be able to see on the bottom left-hand corner of the screen and on the top right-hand corner of the screen. And there's a link actually on the bottom right-hand, the bottom left-hand, and the top right-hand. So all corners are covered. We are partners with Femex. So Femex, and I go over Femex quite often. I really love when they list new things, because it gives me something to talk about, in the beginning of the stream, because we are partners with them, and we're partners with them for a reason, and we think that they're a phenomenal exchange. Their liquidity actually has built up a lot in the last week and a half, and it's sort of like every time there's a major market movement, money finds its way onto different exchanges. Okay, and I think that some people have poor experiences on others, and then they're like, all right, I've had enough, going to try out these different exchanges. So they offer spot, contract, and a yield generating program as well. They are non-KYC, but they do have a KYC if you would like. And really what it is it's a KYC, and it's incentivized KYC. So if you participate in the KYC, then you receive some sort of promotional reward or bonus reward on your trading account, some type of reduced fee or addition. I'm not quite sure. I do know that it's still non-KYC to sign up. Okay, and if you use the link below, Phemex.trade, you get access to whatever kind of promotion that link is attached to. You can tell that I don't know how much it updates or what it is attached to, but it does give you some sort of discount or some sort of incentive in the form of a bonus. All right, exciting thing to talk about, though, they are starting to add a bunch of new pairs. So we have Sol finally, all right? So Solana, we have Sushi, we have Aave, we have SNX, okay, we have additional spot and contract pairs, which I think is really important right now, because not everyone should be trading with leverage. Okay, so if you are in the business of checking out new exchanges or in the mood to check out new exchanges, go ahead and give them a shout out. Give them a checkup, check them out, whatever. Like I said, we've been partners with them for almost 2 years now, and it's for a good reason. It's because they have a really solid team, and they really treat their customers well. Okay, so that aside, right, get all the boring shit out of the way first. Yeah, a lot of drama on Twitter lately, right? A lot of drama in the market. And this is always to be expected when things are, it's just emotions, right? When things are good, everyone's happy. When things are poor, everyone's poor. Everyone is really upset. Okay, so if I could implore you to do one thing, it would be to focus on learning right now. Stay off of Twitter, focus on learning. We're going to get into, is this the beginning of the bear market? I don't think so. I don't like to think in terms of that kind of extreme. Really, the concept of a bear market is not objectively defined, actually. So, you'll have people say that, bear market is, it is a 20% drop, right? A bear market is a loss of the 200-day moving average. A bear market is a loss of weekly market structure. I think we could all agree on when the market is really shitty and continuously doing most of the above, you're in a really poor condition. What you should at least be able to do is identify what the higher time frame trend is doing. And one of the most important things that you could do is to learn market structure, and I think you would see immediately how things have changed in that regard. But it doesn't mean, right, there's no sort of that doesn't imply that things can't change very quickly, which we have seen them before. I will say, though, and just kind of remember this saying moving forward, big ships do turn slowly, okay? So I don't think that we're going to see Bitcoin start ripping up to new highs in the near future, okay? So this stream, as I said, we're going to be doing some new things moving forward. I think the whole streaming bullshit of just charting and taking requests. Let me pop the chat out so I can move this aside and continue to gab on. One sec. I have so many windows open, and I was trying to make sure that this was going to work perfectly. So, forgive me if when I'm transitioning, if anything, any mistakes happen, because for anyone who's been with us for a really long time, and when I say us, just remember myself and my partner, Josh Rager. Couldn't be happier to have a partner like him. We are a team. So we are the co-founders of BlockRoots, which is I would say, one of the premier and primary sources for order flow and market profile education. We have an entire course on it, and a lot of people signed up soon. So it looks like a lot of people are looking to learn how to trade. So, we'll go over things really quickly on the higher time frame, but I want to get into the new format, right? So, I guess we'll cover the new format first, and we'll say hi again in person. Okay, so this is how it's going to be, all right? Let me make sure that everything is clean. What I want to do moving forward, hello again, let me just minus this now. I don't need to, because these windows now are, okay, they're not going to be covered based on what I move around, right? So if I move the chat out of the way, we're still good. Okay, so we have a few screens that are going to be in the window right now. And ideally moving forward, the streams are a lot more constructive. They are going to be hopefully full of live trading, because I think that theory is one thing, application is another. And I think that a lot of times when people do see me trade live, there's sort of a sigh of relief of, oh, okay, it's not like you really have to... it's not like everything is make or break, okay? So with trading, if we could just one lesson real quick, process over outcome. So I am focusing mostly on, and I am looking for the next higher time frame trade, but I'm focusing on where most of the activity is reduced to now, which is on the low time frames. I would describe it as choppy behavior, but it's not really chop, guys. It's just bearish price action. So it's bullish if you invert the chart. All right. So we're going to be doing, hopefully, a lot of lower time frame trading. With lower time frame trading, time to time, I'm going to be drinking out of my coffee mug with a big R on it for Ryan. My wife has like 50 coffee mugs. We have in our kitchen, we have a cabinet that is fucking full of coffee mugs. I'm so excited every time one fucking breaks. And this is, from time to time, I am crass, so this is not a stream for children. But with lower time frame trading, the next trade doesn't matter, right? It's the accumulation of trades. That's why lower time frame trading, I think, is from when you first learn how to trade, or when you come into trading, and it's like when you're coming onto CT and you're being taught by people who just learned how to trade. They will say that higher time frame trading is the most important type of trading. It is the best type of trading, swing trading, follow the trend is your friend, blah, blah, blah. It's the easiest thing in the world. Set, forget, place, take profit and a trailing stop loss. That's not true, because if you're trading higher time frames, let's say we're looking for a swing trade, right? So I have in this, so right now what you're looking at, we'll just get this out of the way real quick. I have a footprint chart. So what this is going to show us is the activity to the right at the offer, so aggressive buys, to the left at the bid, meaning aggressive sells, okay? So if I'm going to go over here, and you're looking at on the bottom, on the right side of the screen now, for me to show up over here, okay, I have to market sell, okay? For me to show up on the right side, I have to market buy. So I gotta either take from liquidity on the right side, take from liquidity down here on the left. If I wanted to be the other side of one of these trades, I would just place a limit order, right? So this is the footprint chart, which is just showing us the most raw information that you can get in a market, which is the interaction between buyers and sellers in a very, very atomized manner. And when I say atomized, and I'm going to try to keep these streams as informative and clear as possible moving forward, so I might be drawing things out a little bit more than usual, I mean on a very small scale. Think of like an atom, right? So very small scale, very raw. You're seeing exactly what takes place between buyers and sellers. There's no question about it, right? We could look at a candle and see if there were more aggressive participants on the buy side or on the sell side. Aggressive meaning they're taking, all right? Because, if you're selling, right, as you can see, there are aggressive sellers coming into the market right now, Okay, and you have this candle dropping right now. You have some aggression. I would imagine this candle probably just takes out this low, runs a few stops back here, and then reverses, honestly. But what you're seeing is who moves the market, right? Market orders move the market, okay? They take us from point A to point B, and think about it as limit orders kind of shape the market. Okay, so that's the footprint, all right? You will see people talking about a candlestick. My buddy Stan shared a YouTube guy who's a YouTube educator talking about candlesticks today. Talking about candlesticks, okay? So something that you absolutely have to learn. 4 data points, though. Okay, open, high, right? Oh, Jesus. Open, close, high, and low. Okay, so if we're looking at, you're looking right here right now, this candle right here. This is the open. This is where it currently is because it's not closed. This is the high, and this is the low. Nothing about this candle right now shows us where most of the activity took place within it. Okay, only until we open up the candle do we get to see where a majority of the activity took place. Okay, so for a footprint chart, I'm just seeing on the very low time frames, right, where that activity is coming in. That's very useful for me because when I'm looking for stop runs, when I'm looking for trap setups, especially when I'm scalping on the lower time frame, I want to see that something actually took place, right? I don't want to just assume that because the low is ran that people puked and dumped into the position. You know, a swing failure pattern, a lot of times, you know, it really works a lot more when there's a lot more people that puke into it because they're thinking it's an oh fuck area in market structure. Oh fuck, it broke, let me get out of this. They puke, market moves against them, they cover. I want to actually see that took place. Okay, I don't want to do any guesswork, or rather, I don't want to assume. Okay, so I'm trying to gain as much of an edge as possible. It doesn't mean that I'm looking for any specific amount. Ideally, I have more than less, but again, this just gives me insight into exactly what is taking place. And I'm not going to have this a lot of the time set to a time-based candle. I'm kind of trying to find out what the rhythm of the market is and set it to what type of cadence, if you may, or again, rhythm the market has to give me the best look at what rotations are, what the cleanest rotations are. Okay, rotations from high to low and back and forth. All right. So a lot of times it's set to a volatility-based periodicity instead of a time-based one because you could just print time-based candles and there could be actually no activity from that. So I want to clean the chart up. Okay, so the next thing we have, which should be on the chart as well, all right, is, let me just make sure chat is good. This is our TPO, time price opportunity, all right? And bear with me, I know there's a lot of people in here who probably know what this stuff is now because they're members, but this is showing us where the market spent the most amount of time. Okay, back in the day, this was interpreted as volume. So before volume was reconciled at the end of the day, right, you didn't know exactly what took place. These days you have, as a crypto trader, I swear you have information that would cost you an arm and a leg and a kidney in traditional markets. Okay, so you could the fact that you could get exchange data in crypto for, I think, for free in some cases still, unless you're getting maybe up to date data. I don't know. It's not my area to get into. At one point I was getting into programming, but I didn't continue to pursue it. Only so much bandwidth, right? So before it was reconciled, right? Before, you know, let me go back to the 70s, 80s. It wasn't reconciled to the end of the day. There was no idea of what volume was in, you know, your 5-minute candle. So participation, where the market spent the most amount of time, was considered where the most volume was transacted. So this is just organizing how the day has shaped up if you were to like compress the day. Okay. So you'll see that what I'm going to do is I'm just going to pop this open. It's going to show us really what the daily candles did. And each one of these is a half-hour candle. All right. It's not telling us specifically where the most amount of volume was. It's just showing us what each half-hour range was. It's not showing us where the half-hour candle closed. It's not showing us where the wick was. It's just showing us what the range was, right? So this is very useful because, again, when I compress this, I can see exactly where we spent the most amount of time, right? I can see where the market was accepting, okay, where the market was rejecting. So acceptance, rejection, these are popular concepts. And where the profile's fat, all right, that is where you spent the most amount of time, right? That is probably an area where buyers and sellers, where business was very friendly, where there was a lot of liquidity, okay? Where if price was to go back into the value area, where 70% of the time was spent, I have mine set to volume. Again, you want to see price and volume confirm each other, but we won't get into really the specifics. If you want to sign up to the course, that's great. But if price is to come back into this area that was very friendly previously, it should probably be very friendly again, right? We're back into sort of this little, I like to refer to it as like as if it was a dip right in the ground, and water was to find itself into that point again. It'd be very, very easy to settle back into its previous space. So this is a profile it's not balanced, right? It's kind of a normal variation profile. This is a profile with plenty of structural anomalies, all right? There's not a lot of balanced profiles recently. This is the most balanced profile. So your balanced profile, or your profiles in general, giving you an idea of context, because you could see whether or not the day was balanced, more range bound, more rotational, or whether it was more one-sided, right? It was a trending day. Okay, so this is a more balanced profile. I'm gonna try to get through this stuff quick because I know you guys want to. To go over the charts. But what I want to do is give you an idea of sort of what the HUD is right now, right? What your little heads-up display is, because we're going to be using this moving forward, or I'm going to be using this moving forward, and if maybe you don't want to tune in the screens anymore. So this is just giving me an idea of how the day was distributed, okay? Don't want to go too far down that road, but what I'll do is I'll look at our locations in previous day. I'll look at if there's any kind of structural anomalies as the day is developing, if there's any anomalies that stand out. These will serve as potential targets or areas that I could look to besides just my weekly, my daily, my 4-hour levels, that I'm really just identifying in advance so I know, all right, that's an area where I want to look to see how buyers and sellers react when they come back there, all right? And sometimes it's best to highlight extremes. So, I mean, if we go back to the most extreme profile that we have, more recently, it's the lows, right? These big lows down here in the initial dumps. Well, you could see price barely spent any time down here. So this is an area where the market was rejected very quickly. And in the same profile, the market was accepted mostly up here. So I want to see, for example, and this is going to make more sense now, but you look for this in the candlesticks either way, in the area where the market spent the least amount of time last, right? Where it went, bing, and got out of there real quick. I don't know why I did that noise. But I want to see if when we come back to that area, there's the same response. If we come back into this area where the market was rejected previously, right? It was rejected by a buyer, right? Sellers got off sides. Either way, I want to see that, hey, does that buyer show up again? Does the market respond when it comes into that level again in the same fashion as it did prior? If it doesn't, that's a meaningful change to me, right? So there's a lot of different little nuances and anomalies within profiles that really what they do is, if you look at a candle chart, you're looking at it and you're like, all right, sometimes you're like, I don't know where to start with this. So if anything, this is just a data organization tool. All right. So that's your profile. All right. Then I have to go back. I have to actually look at my other screen now because I know the layout is set up differently. So this chart right here, it's just, I'm going to have this as a higher time frame 30-minute chart because when I am trading, if I'm going to be scalping in and out of positions and I'm going to be looking at either my 1-minute chart or a 2.5 million chart, 2.5 million rotation chart, or a 500 tick chart as my lower time frame chart, all right, then I still want to have a higher time frame chart so I get an idea of what sort of the bigger picture is, but locally, right? Because I might be so zoomed in on the low time frames on something like a 1-minute chart, and for the next stream I'll set this up so it's the tick chart and all those other charts I referred to. We're going to go over these and you'll learn all about them. I want to be able to know, okay, where's the 30-minute level? Because if I'm entering in on a scalp, right? Let's say that I'm entering, let's just hypothetically, let's say that we have not really done what is semi-efficient business right here. Okay, it's kind of made its way down in sort of a grinding fashion. Let's say that we came down in a rush, left a vacuum, meaning left really no volume transacted. We re-accept back through there. All right. I'm probably going to expect us to travel a considerable distance relative to the small sort of forced perspective I have on my computer screen. So I'm looking at a 1 minute chart. I'm looking at, a 500 tick chart. It's going to be so zoomed in that I don't want to have to move my chart to place some kind of limit take profit. So a lot of times what I'll do is I will place the trade and I will from there begin to drag around and follow over here now. I will begin to drag around a limit to exit. A lot of times I will let me say this properly. Again, in the beginning you're going to hear these sort of maxims, right? You have to always use limit orders. No. It's a very friendly market often to use market orders both ways, as long as that gap that you're capturing pays beyond what you're paying, your broker, what you're paying in your fees, what you're paying to transact, jump the spread, et cetera, et cetera. So ideally, I will try to use limit orders. But when you're scalping, it's so in the moment for this type of scalping that I'm going to be doing on a lower time frame. Let's say we're looking at a footprint chart, and I see, like I saw this morning, it looked like a short squeeze, very one-sided, just buying activity, no real bid following up. As soon as we are looking to apex, as soon as it looks like we're apexing and some sellers are coming in, I know that they're trying to do the same thing that I'm going to try to do in that moment when they see all that volume trapped up there. They're going to try to lean on that side of the market as hard as they can, right? So what I'm going to do is I'm going to bang that side of the market. I'm going to counterpunch them, right? So I'm going to hit at market relatively hard, right? And then what I would want to do is get out at the next sticky area with a limit order. And, sometimes the market is rewarding, sometimes it isn't. It's not a tree where, you just get to shake it and get the perfect sort of prototype, the perfect trade out of it. So I use market orders, I use limit orders, I use the tools necessary. And, sometimes when shit hits the fan, you got to be MacGyver and you don't get to use the best tools possible and you have to make do with what you have. And for lower time frame trading, one of the best things that you could do is just become familiar with your setup, so that even something like because you have to imagine, if you're a click trader, any kind of noise on your screen, anything that takes up and someone might say that this is your reticular activating system, anything that is taking up mental bandwidth is going to be using energy that really you don't have to give up against a computer. And I'm not saying you're going to out trade an algo, but the point is you're trying to optimize as much as possible, trim fat, and make do with what you can, right? So I'm trying to be as fast as possible. I'm trying to use limit orders and optimally exit if I can, optimally entry. A lot of times I'm marketing in, almost all the time when I'm scalping, I'm marketing in. Put it that way. It goes against one of my core approaches for one of the edges that I believe I have, to use limit orders. It wouldn't. It's not that the whole premise of that trade is that I wouldn't be able to get a limit fill, okay, or that the limit fills are over, right? The opportunity is gone, and that's why my opportunity suddenly exists. Okay, so we have the higher time frame chart, so I could make adjustments, and I'll just show you for example. So right now I have it speed set up because I am in cash. And I have it speed set up so that I can get in at about 300,000 USD a clip. So 10 BTC right now. All right, so I could bang in at that much at a time. It's not that friendly right now. Normally I'm trading. I could, honestly, I don't want to say normally I'm trading, because I could trade anywhere from 300,000 contracts to 3 million contracts. All right, but right now I have it speed set up. Okay, so that I can quickly make adjustments, and hopefully you could see this on the footprint chart, on the DOM. This is just showing us the limit, right? The DOM, the depth of market. This is constantly going to be changing. Whoever wants to say they could use this as an edge in BTC, it's very difficult. Sometimes I'll have a DOM with your normal tick setting, your normal interval of 50 cents or $1, and then to the right I'll have the same instrument open, but I might have it at 25 or 20 or 30, and that's really just to exit also with a limit order a little bit further away. But other than that, I'm not gaining too much from this other than very quick execution. So let's say that I see a trade setting up right now and I want to bang in short, and I want to bang in short right away, and now I'm short. Okay, So very quickly, I'm entered into a short position. Now, if I go into the other side of the screen, all right, so you see the screen in the middle. I'm just trying to follow along with where you guys are seeing this. All right, so I can immediately set my take profit. Now, I could take profit right off of this immediately as well by closing it out, by flattening it out on the DOM. So as you can see, the trade's moving against me. Maybe I'll just flatten this. All right, so I am helping the trade move up now. So I've just flattened. Too late to cancel. It's already done. So this is allowing me very quick execution. So this is what I'm going to be using to enter trades mostly. It will be what I'm using to to exit trades at market, and then a lot of times I'll try to drag a limit. Otherwise, again, all of my entries, exits are going to be on this screen that you're looking at down here. Again, no edge to be had, right? This is, if you're trading traditional markets and you're trading like, let's say you're trading the ES, you might have your, and when I say ES, I mean your S&P index futures, E-mini S&P. You will, and those are two different things, so I don't want to say them like they're the same thing. You'll have a DOM set up you'll have a ladder, right? It's called a ladder. You'll have it set up for the ES. You'll have it set up for crude oil. You might have one set up for gold. You might have one set up for treasuries. And you're going to see how the market is reacting, okay, next to each other, right? So you'll see how maybe, and this is going to be maybe more with relation to a catalyst, maybe after a Fed announcement or something, how the market is responding, what areas of the market is responding. Now, also, you can look at a DOM, and there's a lot more to this, obviously, than this, but you could look at a DOM or a ladder, and I could have this set up. So, for example, I can have it so that I see the last trade size, right? The number of changes, the amount of liquidity changes, pulling and stacking. So, for example, I'm going to put on just Delta right now, all right? So it's going to show me, what if a level had in aggregate more buyers than sellers or more sellers than buyers. And a lot of traditional market traders, they'll use a ladder and they'll use it for pulling and stacking, right? They'll see, and this is when it's, and why I say it's less useful for BTC is because BTC is moving so much, right? That, if you're trading the ES, you could look at the same area on the ladder and you might be focused on that. That might be your daily range, right? And you'll see like, okay, 44,000, has been a ton of, there's been a lot of spoofing at that level, but there's been a lot of pulling, right? So meaning, orders have been added, but they've been pulled every single time, right? And then you might see a different level that has a lot of stacking, for example. So I should have just left this short on, but it was just for the sake of showing you how to use how I'm going to be using that. But you'll see a lot of stacking, right? So you'll see over time, right, this area has been accumulating positions rather than just seeing sort of the algorithmic activity, high frequency activity that really is just taking place by a lot of market makers and again, more quantitative systems. This is not something that you're gonna like look at this and gain some type of, I don't care, you're not Rain Man. Maybe you are, but it's not likely that you're gonna gain much from just looking at the Bitcoin DOM, right, or the ladder. Okay, so this covers all the charts, right? All right, so this is what we're going to be using. I have other things on this as well, but I could not get them to pop up. So in between, right, so you see, so first of all of these things are like that, and then I have a big screen to my left, right? So a big vertical screen to my left. In the middle of this, and well, I actually don't need to look, it's right here. And this chart, okay, I have my tapes. So this is the time and sales, right? So I'll have it separated by futures and spot. So I'll see what tape is moving, faster, looking at tape velocity, looking at, interest in a level, right? Are we seeing a lot of spot buying at this level? Are we seeing a lot of spot selling at this level? This is, again, really it's just a disorganized footprint, all right? This is footprint 1.0, and the footprint is showing us what has actually taken place specifically at the level. It keeps it very organized. We don't need to, we don't need to worry about really tape reading like they used to. I do like to see it though, because I do like to see I'm looking at, for example, right now, I'm looking at the Bybit. I'm looking at the Bybit footprint, but I do like to see what is taking place on other exchanges, right? And I do also like to see how the futures market is reacting and how the spot market is reacting, right? The spot market is going to be what takes us to new highs. The futures market is going to be what takes us to the new high that leads to a big sell-off, right? The futures market is ideally going to be what gives us the trap that gets set up that the spot market buys into that causes some type of squeeze when we find a level that that buyers are interested in, which does not seem like right here. So that should be that. I just want to go over that really long-winded explanation of what you're looking at, and moving forward, I'll change some things around, right? We'll hopefully we'll go over some different periodicities and maybe different tips and tricks, right? Nuance, because that's what everything is in trading, in my opinion. Yeah, DOM is not that good. Footprint easily, yeah, footprint. The DOM is not so. I think if you're like trading crude oil, if you're trading treasuries, if you're trading ES, you want to have trading. You want to have like the creme de la creme of DOMs, right? A lot of traders will be ladder traders, but it's a completely different style of trading. You're not getting that in Bitcoin. I mean, if you are, there's times when I definitely have thought that I have gained a little bit of an edge, maybe from time to time looking at it, but I don't know. I haven't recorded that enough for me to know whether or not that was just, my brain attributing meaning to something where there is no meaning, and it's just randomness, right? So I haven't recorded that, which is another really important thing you need to do with your trading, which is record things, right? So keep data, right? Because you're going to be trading on behalf of data. Getting back to something that I almost forgot, which was a point about why I really like to focus on low time frame trading. Don't let anyone tell you can't make a lot of money trading a low time frame. That's complete fucking bullshit. Okay. So with lower time frame trading, I have a lot more opportunities to test my ideas. Higher time frame trading, if I'm looking at this chart right now, right, and I'm looking at the daily, it's like, what trades do I think are setting up right now? Well, we're kind of within a previous weekly range, right? So we're within a previous weekly range. My higher time frame trades are not really available right now. All right. So what happens if I kind of have a new idea about, some kind of higher time frame trade, right? A swing trade thesis idea, whatever. How many times am I going to get to try that idea? Right. I'm probably not going to get to try it too frequently. Okay. So with lower time frame trading, you get so many at-bats, right? You get so many swings, okay? And that's why each one is actually not that important, okay? So never, a baseball player doesn't walk up to home plate and think that swing is going to be the most important one, right? That's going to define everything. Now, looking back, you'll say, well, that was an amazing home run that defined his career. That was a grand slam that won the World Series. You might look back and say that, wow, that one trade I took, and a lot of times this does happen, that one trade I took really got me going. That was awesome. But it's never gonna break you as long as you don't let it break you, right? You don't hang on to a higher time frame trade, turn a lower time frame trade into a higher time frame trade, and you make sure that you stay in sort of that frame of reference, right? That lower time frame mode where it's wrong right away. It's right away, or it's wrong right away, and on to the next one. And the next one's going to arrive pretty quickly. And that's the point. You get a lot of opportunities to test ideas. And that's what you need to have to make informed decisions, right? To know that you have some type of actionable approach. All right, so I've taken 200 trades, and I know that I have an 80% hit rate on these trades, and that I could expect this type of return. And I know that out of these 200 trades, rather out of the 80% that are successful, that there are these conditions that are shared each time that they're successful more than the other times that maybe they're successful. So there is actually a difference in the trade that maybe yields me 1R versus a trade that yields me 2R. All right, so I could optimize and allows you to just form better edges. Okay, so now I'm going to blow the chat up, all right, on the screen, and I'm going to go to the other chart, which I have to find. Okay, so it's not covering your screen yet. Now it is. Should we put me back on? Now where'd the chat go? Chat. No, you don't just leave me off. I don't want to mess around with OBS right now. Let's blow the chat up. Okay. So hopefully that was coherent, comprehensive. You understand what we're going to be doing moving forward, or what I'm going to be trying to do moving forward. And I mean, what I'll do is I'll try to break the streams up so that we're not like having a stream where we're discussing the current event and then I'm trying to at the same time bang out trades, and then we're going back to questions, and that would not be good for my own trading, and I don't want to take bullshit trades just for the stream, right? So let me go back through the chat. Let me pull up OBS on a different screen, make sure you can see. All right, so what I'll do is I'll pull the chat over here, shrink this down. Okay. Imagine if I read that the sound was off. That would have been terrible. That would not be a first. Oh my God, someone says sounds 10 out of 10. That's amazing. Okay. Cool. I'm not having fun staying poor. Yeah. Okay, Ted. Ted, you might be newer to crypto, but as the guy said below you, I'm not saying anything, but he's saying something. Yeah, lower time frame trading, you can learn a lot faster. You might hear this said many times before. If you could trade a 1 minute chart, if you could trade a 3 minute chart, you could trade any chart. Hold on, I'm trying to get this in so I could just scroll. I think there we go. Okay. All right. So, Dan, what's up, buddy? Are we going to die? No. Could you please flinch at Doge if you can? Oh. Could you please please flinch at Doge? Yeah, glance at it. Yeah, sure I can. All right. Cool. Following Wyckoff. I don't personally want to say that I'm not an authority on Wyckoff whatsoever, and I hate. I've said this many times before. I hate to to address things and act like I suddenly can talk about them, like I have any kind of advanced level of knowledge of them. Yeah, Wyckoff is really old, and human nature is as old as human nature hasn't really changed much over time. So those patterns that show up in markets, they're pretty consistent. Bullish patterns, bearish patterns, accumulation patterns, distribution patterns. So I could tell you what has a semblance of a Wyckoff bottom, a Wyckoff top, but by no means, and I don't even think that it's a good idea to get into too much specifics with it either, because market is semi-random, right? So you can't with Wyckoff, I think in a lot of patterns period is traders look at a book and get an idea in mind of what something exactly should look like, and then anything that deviates slightly from that is kind of written off, when really you just have to understand what is exactly taking place, what is taking place in the underlying. And I think that there's a lot of merit to Wyckoff. Intro and HUD explanation, super cool. Okay, yeah, you know what, sometimes it might be a resolution thing, so we'll fix that. Yeah, DOM stuff is not really useful for BTC. There's it really is, because it's here's the best way to put it. It's an advertisement. So, the order on the DOM, right? This is just an advertisement. Same as like a heat map too. It's just an advertisement. It can be pulled right away, right? And a lot of the times it is used in a very sort of manipulative manner. Okay, and just trust me when I say that the activity that's taking place here, you're better off trying to look for patterns and edge in the tools that are a little bit slower. Just put it that way. And again, like I said, it's an advertisement, right? It's just an advertisement, and those advertisements are constantly going to change. The benefit though is, yeah, you could. So with this, let's say we were trading Bitcoin. Let's say like Bitcoin was stuck in a ridiculous range, or I just changed the tick setting for this. I mean, I could use the DOM if we were stuck in a really tight range, and I had, let's say, instead I had delta here, I had maybe volume, and there was like such an incredible disparity between certain levels, meaning we had some really ridiculous volume at one level above, one level below. Yeah, I mean, you could say it's sort of like those areas of high volume. The same way if you're looking at a higher time frame footprint, Yeah, I mean, they probably will act as some sort of friction upon returning back to those levels. And that's because, like, the people that get involved with that, they're going to change decisions, act on that, right? If you got short at a location, you got short pretty heavy, and price came back to your entry after, let's say, moving against you, you're probably going to get out. So maybe that area of high volume, because there's buying and selling there'll be a level of interaction that will offer some type of meaningful response. And if you're scalping, yeah, that's a lot of traditional market traders who use a DOM scalp. So it's on behalf of, it's based on previous levels of activity, and again, like I said, pulling, stacking, and all of that. But for BTC, not really. Let's see. Yeah, so do you see any I don't really use heat maps, but I've looked at heat maps before, but I don't really see too much of it. Listen, different strokes, different folks. Okay, you could trade many different ways, and I don't want to disparage anything besides Elliott Wave. That's a joke too, because I know people who trade successfully with Elliott Wave. But I don't really use heat maps, again, because it is an advertisement, and I only have so much bandwidth, and the things that I've been using forever are the things that I'm going to continue to just try to get better at using. If I introduce something new, I better really have a compelling case for introducing it, right? And I have to test it for a really long time. And I find that, one of the disadvantages of having a lot of screen space and having a lot of screens is, some time to time, especially in crypto, you get these new tools that come out and these new pages that come out and these data sources, and even just putting it on my screen for me sometimes is distracting, right? And you could imagine that, like I said, there's sort of a conservation of energy, right? Your thoughts, everything you look at, like my desk space needs to be really clean for the same reason. So I don't really look at heat maps for a few different reasons. Is this sponsored by Femex? Well, we're partners with Femex, right? So from time to time, I've said that we're sponsored by Femex. I don't know what the proper lexicon or jargon would be, or maybe just syntax. I think it's just a matter, not syntax, a matter of semantics. We are partners with them. So yeah, we are partners with them. We've been on the Femex team now for going on about almost 2 years since they came out. So that might be wrong. It might be a little bit over a year and a half now. Double check, right? When Femex came out, shortly thereafter, we joined the team. So yes. So I think the best way to put it just clearly, yeah, this is sponsored by Femex, if that answers it in the most clear manner. Cool. All right. Selling the bounce like you did. I didn't sell the bounce. Thankfully, I got out of the market before. I didn't get out before the dump, guys. So let me just be as honest as possible. I was selling on the way up, but I started reducing risk after we started breaking down. But I'm really happy I did, because I managed to keep a majority of the money I made going back to 2020. So, and that's some of that is luck, right? How does BlockRoots teach you how to trade lower time frames? Well, what we do is we have an entire course on market profile and order flow. So, really quickly, and I hate to shill our own thing, right? We'll go to, wait one sec. What I'm going to do is I'm going to pull this on a separate screen so we don't dox anything. And I'll just show you very briefly. I don't want to take up your time with this. I hate shilling anything. I only want people that want to learn this, and that's it. I don't want to sell on anyone on anything. So this is the BlockRoots order flow market profile course. Okay, introduction to markets, some basic stuff about markets, right? And then we go back to basics of building a trading system, some basic stuff here. I don't want to teach anybody how to trade from the beginning. That's not what this is. If you want to learn intro stuff right from the get-go, I would say go to Cred. Right? He has awesome free stuff. Use all the free stuff first, regardless. Don't pay for anything from anybody until you go the free route. All right. You could learn it all for free. You don't have to pay anybody. Okay. But we put a lot of effort into creating this course. So we have a lot of information on market profile. All right. and then we have the same thing for order flow. Okay, so we're giving you all of the tools and all of the education, right? And then we have profile and flow setup series, where we go into some basic setups, how you would use them in combination, supplementary material. This is kind of to talk about some more nuanced details. And then we have live streams in the community. And yeah, I think it's a pretty robust trading course for market profile and order flow. Okay. All right. Cool. So let's take a look at Bitcoin. All right, because we've been going on for a really long time now. Hopefully, it has been somewhat enjoyable for everybody. But we didn't do that much time. That's good. All right. So here are some of the problems I have. Okay. I don't want to look at alts, and I don't think that anyone should be looking in alts right now. And again, this is not financial advice. And by all means, someone will be getting into alts right now, or a favorable alt that will turn drastically and then make a lot of money, and it'll be a really great decision that they made. But I think that will happen in a universe regardless, right? In a large enough sample, someone's going to do that. I don't think that you should try to seek to be that person, okay? I don't think you should try to seek to be the lottery ticket picker, all right? I think you should try to make decisions that are more informed. I would stay out of alts. Honestly, that's what I'm staying out of alts. Okay. BTC right now, I have a lot of trouble with it. All right. From a range standpoint, all right, rather from a market structure standpoint, we're going up all the way to the higher time frame market structure. You got a lot of people that are worried about this monthly right now. So monthly is closing in 2 days. Now the monthly is pretty disgusting, right? The monthly has engulfed the prior 2 months activity. But that was the range you were forming. I kept referencing that range and how you could use the monthly up here to really start discerning that, because you had an inside month structure. Not completely inside, but the first time when we didn't have a series of higher closes really. And we had a lower close, right? Or rather, we closed back within a prior monthly. So we engulfed the prior one. I'm interested in the monthly close because there are, with regard to higher time frame structure, and this is more with regard to breaking levels, so close through a new level. When you get higher time frame close through a significant level, a lot of systematic and algorithmic systems or algorithmic based systems that are non-discretionary, right, are going to be likely activated at that point, especially when it's a very important change in market structure. So I don't know what's going to happen after this. I do kind of see the flip side to that, like maybe the game theory, like inverse thinking of, if this is going to be the first really crazy, horrible market, horrible monthly close, it's going to create a lot of sell pressure, market's going to puke, there's going to be a lot of liquidity available, the market's going to reverse from there. I just want to see how this closes either way. Right, it's just looking disgusting either, it's looking disgusting. Normally I'm not thinking about the monthly like this because it's a fucking monthly candle. Like, some people are looking at a monthly candle 5 days in, right? It's a horrible monthly candle. It's like, dude, we're a week into the month. Like, a lot can change, and often a lot does change, right? So it just happens to be, since we're within close proximity to the close, that I'm interested. Weekly structure, we're back within a prior weekly range. Let me turn off this VWAP. So back within a prior weekly range, it was pretty significant on the way up, right? And we're essentially at the midpoint of that range. Now, my lower time frame trading, it is mindful of higher time frame levels, right? Because I know if it's a first test of that level, first return to that level, it's very likely that that first return is going to yield the most positive response for the trade setup that I'm looking for, right? And if we get a break through that level, if we get, an acceptance above, an acceptance below, then, things could drastically change. Right now, we're just kind of smack within this weekly level. So, we just, again, like, we're coming into the monthly close in 2 days. We're coming into the weekly close in 1 day and 5 hours from now, right? So let me just make sure that there's a set to UTC so it's kind of neutral for everybody. Yeah, we're good. I don't want to have a set to New York time. So this is smack dab in the middle of a range, right? And then we have our daily levels, right? More local daily levels, okay? Daily swing low. We're about to close below the last daily swing low. Okay, I don't think that that's going to be the most significant thing. It's kind of obvious what the market is doing already. We are sitting, again, like I said, in the middle of the range above a previous daily and weekly level. So it is the weekly and daily level, right? This is the weekly level. This is a daily level. So this is the lowest daily close from this previous structure, right? That is, an important contextual level. When I say important contextual level, I mean it's a level that a lot of the market is looking at and a lot of the market will act on behalf of, right? The higher time frame up you go, right, the more people you bring into the market, right? We break the all-time high, everybody goes, holy shit, I'm getting involved, right? We break it back, we start breaking market structures to the downside, everyone says, fuck, I'm getting out. If you break a 15-minute level, you don't pull in, Paul Tudor Jones, right? You don't pull in, your position traders that, that couldn't care about those lower time frame ranges. The higher time frame up you go, the more significant it becomes for obvious reasons. So that level should be marked on your chart. So as you can imagine, that level on the 5-minute time frame breaking is not that significant. You close through it on the daily, it becomes more significant. But we're kind of sitting between a rock and a hard place. I'm not going to put too much thought into this daily close if it does close below this low, because either way, I think ideally if you're bullish, right, you want to see you want to see what happens if we get a dump into this low. Maybe we have a 3-drive structure, right? I think they were probably going to, I think we're going to puke again, but I don't think the bottom is that far away, guys. Right? I could be completely wrong, okay? But I think there's reason to believe that we could see a meaningful response here again, and until the evidence proves otherwise, I'm not going to start assuming some kind of reality like that yet, right? So we're within a rock and a hard place. Zooming out, also looking at some more important structures. Right, we go back to the weekly, throw on some pretty basic tools, right? So again, we're below that 20 period. If we look at the daily, you're going to see that on the way up, right, especially on the 4-hour chart, in a strong trend on the way up, this 4-hour moving average, this 4-hour 20 period moving average, kind of, your center line for your Bollinger Band, an area where you could expect the market to mean revert to, pretty good area to expect as dynamic support on the way up. When things change, you're going to see that it's going to act as dynamic resistance on the way down. So if you're on the daily, if you're on the 4-hour, you're sitting below it right now, it's just a sign that the bears are, again, there's another sign that bears are in control besides market structure. Okay, so those two things aside, focusing on the lower time frame, right? I want to have the VWAP on, okay? So I have my VWAP on for the daily. We'll go down to the lower time frames, put on the levels, right? And I'm always going to mark out yesterday's levels, right? So besides, we've moved away from the other screen right now. So, obviously going to be looking at the TPO immediately to see where we've interacted, right? But I'm always going to mark out some other structural base levels also, right? I want to know what yesterday's range was, right? I want to know where we sit in with respect to yesterday's range. Okay, so this is forming a range overall from a left to right translation standpoint, but we have prior days ranges, and yesterday wasn't a balanced day whatsoever, really. All right, let me put on the session volume again. So the session volume, this is if we were to go back to this is what this is. So when I'm on TradingView, looking at the volume profile, okay, as I said, I have my TPO value area set to, hopefully, I don't know if you could see this drawing. Let me make the, maybe you could see if I make it this big. The session volume on TradingView is this thing on the right, right? That is grossly big now. But you could use that, just like you'd use a TPO. Not exactly the same. You always want to see the price and volume are moving in unison. There's not any kind of weird standout level where maybe you have like a excess at the lows in TPO and you have complete massive amount of volume in the profile. You would want to see that if you're bullish. But you would want, if you saw that at the highs, for example, that'd be a bad sign. Probably a puke. That'd be a good trap. But I always want to have an idea of where yesterday's high and low was. So we're looking at a profile right now, and you could see that it's just the high and the low of this previous volume profile. I personally, so from a, and this is not how I'm going to be doing most of my trading throughout the day, because there's not going to be that many options to take these, there's not going to be that many opportunities, right? But if I was a bull right now, right, if I wanted to just take a long, okay, I would need to see a few things, right? One, you have your VWAP. Again, that's where most of the risk is tagged on. So clearly trading below it, it's a kind of a basic thing. If you're trading above the VWAP, you can see that, bulls are back in control. You'll see that, things have pretty much changed on the lower time frames. You're trading above where most of the risk was put on. So, shorts are beginning to at least second guess any positions that they're currently in, or maybe they already have. So, you could look for some long setups from that standpoint alone. I personally, I'd be willing to look for long if we were to trade back above yesterday's low, right? So back above yesterday's low, okay, above yesterday's low, starting to trade back above this little cluster, and then at that point, just to give you an idea of what kind of setups I'm looking at, and I'm not trying to bite off too much, because in these bearish conditions, you have to start to think the opposite, as you did, as you saw occur on the way up. There was always a lot more upside than you expected, right? Price always traveled a lot further. It always pulled back a lot less. Okay, I don't want to say in the bear market, but this would be, if in the bear market, your expectancy for your trades to the upside obviously is going down, right? So if I'm looking at a long opportunity and I'm seeing that we're trading back within yesterday's range, back within today's value, then honestly, what am I looking at as a target? I'm probably looking at getting in a trade pretty quickly above 34.7, and targeting something like today's point of control, right? 36.4, right? Targeting that. Maybe if price action is strong enough above this level, we'll evolve we will decide from there differently and maybe target slightly higher. But you don't really have that much above you to target, right? You have a weekly level right there. Okay, so in this condition, right? And I say it in a bear market, right? I don't think it's a bear market, and the language is kind of stupid, right? For one, if anyone's like puking, pissing their pants, bear markets are a lot shorter than bull markets, right? I don't think anything fundamentally has changed. I see Bitcoin still at the same trajectory, just not on the same path. That's a really important thing to understand. Same destination rather. Okay, different path along the way. Okay, so trade within yesterday's range, and I will look for long setups. All right, but until we do something like that, a lot of what we're seeing on the low time frame. So we go down to the minute chart. Like I pointed out this morning, you're getting these pumps that look like they are the beginning of a move. People are zoomed in. It looks like, hey, we just retook an area market structure where we were rejected last. You're seeing the move up. It's very thin. Okay, it's sort of the late shorts being squeezed, because you're getting a lot of people that are, as you can imagine, starting to, on the way up, you saw people buying the highs. Now you're getting the opposite on the low time frames, with people constantly selling the lows. You're getting these sort of exhaustive moves up, and then prices kind of just grinding back down. All right, so I would need to see that we start at least trading back within even the most, mediocre of goalposts, back within yesterday's range, right? So Bitcoin on the high time frames, sitting within a rock and a hard place. On the low time frames, it's not good, right? There's no way of sort of sugarcoating this. It's not a pretty structure whatsoever. If you want to talk about what would make this pretty, it's what would be obviously pretty at this point. Okay, so back above this weekly level, which also is a good amount of confluence between that weekly level and this daily swing high, right? Definitive level within market structure. Okay, on the way down, right? Back within this weekly level, sort of pivoting at the same relative location. So if you're doing this, if we do this, guys, I hope you don't have to ask any questions, right? This was a semi-efficient move down. This wasn't, meaning this was work on the way down, right? There was actual selling that was working buyers over at this point. This was a liquidation, right? So this was pretty inefficient. When you have this, you'll see that when you have that kind of liquidation like we had, circling the candles are relevant, because you wouldn't know just from the candle that there was a bunch of liquidations. But you'll fill out this gap where that sort of vacuum occurred, right? Where that imbalance occurred. This is not exactly that inefficient, but still, if we're trading back above this weekly, daily level, I would say in these conditions, you want more, you want price to show you more, right? In a bull market on the way up, like I like to put it this way, like I only need a few pieces of evidence to get long, all right? In these conditions, I think you want to check off all those boxes. So make it higher than lower, right? So I'm looking for at least, trade it back above 40, right? Trade above 40, and then, yeah, I'll target something like 46, okay? But even then, like, I'm kind of assuming that 46 gets front run because who's not going to be thinking the same thing, okay? If we were to, I mean, shit, if we're to break this, like I said earlier, I could see stabbing this low again. I don't want to grind into it. I really would want to see a puke into it, but it's grinding right now. If we just keep grinding into this, it's probably going to be ugly. But if we move up from here, let's say a little bit, and then we end up puking down and seeing a strong response out of here, then we could talk maybe a longer range developing. And again, that's not out of the question. And maybe this being an accumulation structure. If we just take out these lows now, right? If we take out 32, right? I think your weekly level is probably most significant, right? It's very close to closing. If we take that out, right? If we take that out on the daily, there's not a whole lot between us. I mean, you don't really have, the same way on the way up, guys, when we were talking about significant levels, like where to look back to just in case. I mean, what do we really have? That is, just turn this off. That's not really anything, right? There's nothing that's really of any substance down there. I mean, you could really start looking at some of your daily levels, but I mean, put it this way, this 24 level down to previous all-time high, so we should do that. But actually, you know why I'm having trouble doing that? Because I'm not looking at the right chart. Doesn't have enough history on that chart. So here we go. All right. So this area right here, I do think I'm going to chart this out for you and then explain it. So 24, around 24 to 19, right? Previous all-time high level, 24. All right. Nothing really at 24 though, right? It's kind of this was one-sided on the way up. And if you accept back into it on the way down, it's usually the same way in the opposite direction. So 24 is significant because that's Michael Saylor's average holding right now, right? His average price for his entry for all of his Bitcoin right now is at that level. So it's the same concept of when I'm looking at a footprint and I see, if I'm looking at, one sec, where's my foot? I have so many things up right now. Okay. Where's the footprint? Okay. If I'm looking at this, let's just find, let's go back to something right now that's close. All right, so that's not significant, but it doesn't have to be significant. So looking at the footprint chart, this person who got long up here, and you don't know, I don't know, I'm not going to do the quick calculation because open interest dropped, so maybe it was just a short closing out. Let's just say for all intents and purposes, this is you. You just bought, $162,000 was so important to you. That was a big amount of money. That was your company's balance sheet. Let's say that's where you got long. How do you start feeling if price comes back down to that level, right? How do you start feeling when price starts moving against that level? So that's one of the bases for the setups that I take, and that's one of the ways that a lot of people trade that are using footprint. But that 24,000 level, okay, now we have to find the big screen. That 24,000 level is where Saylor's average is. Okay, so as you can imagine, you don't want someone to, let me get the chat back up. You don't want someone who has $3 billion worth of Bitcoin to start getting uncomfortable. Okay, that's not what you want, right? Now that is sitting above the most important contextual level on the chart, on the high time frame, I would say, below us, which is a previous all-time high, right? Now, I want to say that in any market, that this is always a buy, right? If that's a buy opportunity, that's clearly a the most significant level on the chart is the all-time high, right? If you're coming back up to a level after putting in an all-time high, that is the most significant level. When you break an all-time high, like I said, if anyone doubted at that, I was saying this back down to 10,000. If you break the all-time high, it's one of the best trades, because if anyone doubted previously, they're not doubting anymore. You just pulled everybody into the market plus a bunch of new people. All right, so the problem is it was a one and done all-time high. It's not like an equity or gold's not a good example. It's not like other examples of all-time highs where maybe price had a few tests and it was kind of a developed area. The next really developed area, and this is not to stoke fear in anyone's heart, the next really developed area, truth be told, is down here, right? I mean, this is arguably where you spent the most amount of time. So that is just from that standpoint. I'm not saying like this leaves out buying, demand, this leaves out demand that sits sort of latent, waiting to take up any opportunity, because Bitcoin is, the most amazing thing in the world. And I say that, obviously kind of tongue-in-cheek, but that happens to be how I feel. I don't like the idea of, so put it this way, this is path dependent. I mean, to get to 20K, it means you have to pass through where Saylor got in. And like I said, I don't want to make a guy who holds $3 billion worth of BTC uncomfortable. He kind of looks like someone who's on tilt. I got to be honest with you. So that is the trouble, that I don't think that if he came down to 20K, I kind of say this kind of cringy, because it's great on the way up, guys, but never romanticize something. And I know a lot of people are, and I feel really bad, because a lot of people were made wealthy from BTC, but at the same time, look how many people were made poor because of it. Excuse me. So I don't like that level. I mean, and if we just sort of put on the entire profile, I changed my. Here we go. I must have changed a something before I changed the chart. Hold on. Eek, that's so ugly. All right. Wait one sec. One sec, because I'm always worried about the contrast. I just want to make sure everyone can see this appropriately. So bear with me. Regard me. I promise I won't let you down. Okay. So this kind of tells the story right here, right? So what you're seeing is the entire volume profile for the entire structure, right? So again, where did most of the activity occur? Well, where is it skinny? Up here. Now, this is going to be skewed, obviously skewed, because this was a range that lasted for, 1, 2, 3 years, basically. So that's to say that this volume up here was not significant, just because it's so much smaller than this. It's just a matter of perspective, right? And because you spent a lot more time doing this than you did that. The point I'm trying to draw, though, aside from that, is that there's not a major pickup, right? You see where the major volume occurred. Okay, so when you're looking at a profile, when you look at this, it's the same thing as when I'm looking at a TPO, and I'm also looking at, for example, let me go back to the TPO chart. Like, let's go to a TPO that kind of stands out to make my point. I mean, all of those kind of did too, but this is a good one because it's kind of a double distribution, right? So you could see my, hopefully you could see the cursor. You're not seeing the ink, that's why, right? Because I have to make it bigger when it's on this screen. Okay, maybe you are, I don't know. The volume profile for that entire structure you're looking at, we think about it the same way I think about a TPO. So let's say this is a true single print and there's really no activity there, and it's not right now. It is a double distribution, but it's not a single print. If we were to gain acceptance back within here, all right, and we're looking at the TPO chart, looking at that center one just in case the drawing's not showing up. If we're to gain acceptance back within that center area, the next area I would expect to offer a I'm looking at it right now. I'm like, shit, why is it drawing not, it's fucking weird. I don't know. If we were to gain acceptance into that center area, I'm not thinking anywhere within that center is going to act as meaningful resistance, right? I'm thinking the next area is probably going to be the next fat spot. Okay. So the same concept applies. I'm just totally slouching right now. The same concept, if my wife was home, she would come in and she would say, sit up straight. And the same concept applies, right, to this profile. So not to stoke fear in anyone's heart, like I said. All right, that's just, you got to call a spade when you're trading, because it's not going to keep, you're not going to keep price up with just your thoughts alone. All right, so let me just go through the chat again. All right, hold on one sec. Okay, got a bunch of questions. You know what I will do? I will pop me on. Ready? Oh no, I can't. I feel like if I, oh fuck it, I can't. Hold on. No, it's gonna be, I'll fuck something up. I thought I could just duplicate it. I'm still such an inept person with OBS. It's embarrassing, but I'd rather be inept with OBS and good at trading. Okay, so any predictions based on current data? So we'll look at some data. I mean, some things that I like to look at. So again, I always mention this because it's not something I care about. Genesis volatility. Oh, I forgot to mention, phenomenal platform. You know, awesome guys, awesome free YouTube to learn about all the things that I touch on, and I'll be touching on right now. You want to see at a bottom, you want to see pessimism, but you can have continued pessimism as price continues to go down, obviously, right? As put buying, on the way up, calls were going to be in demand. Clearly, people wanted upside capture, a form of leverage it doesn't offer any, that doesn't have any kind of liquidation. Options traders using calls to gain directional exposure. So, you wouldn't look at call skew being, you wouldn't look at skew, which we're looking at right here, being positive and say like, oh, the market has to turn now. But what you want to see is, I'm pointing this out. This is slider, so we're going to look at a bunch of expirations. So here we have 7-day, so near term, 30-day, 1 month out, 60, 90, and then I use 120 also. So this is showing us the difference in implied volatility between puts and calls. Puts, think about puts. If you're buying a put, you expect the market to go down. That's a very simple way to put it, because you might buy puts and not expect it to go down. You're just buying it as a hedge, buying it as insurance. You might be buying it for actually more reasons than that too. Options can get quite exotic. So when this chart, all now being below zero, is showing us that puts are trading more expensively, meaning puts are trading at a higher implied volatility. Just think about that, meaning people are buying more puts. So the market is really pessimistic, and it's not just short-term pessimism. So in, let's go to any one of these pullbacks. So let me get this off the screen now. So any one of these pullbacks on the way up, like that, you would see short-term skew flip, right? So we would see, for example, 30-day, 7-day, negative, but we'd see all the longer-term skews still positive. Just think about it. It's like pessimistic in the short term, great expectations for the long term. Right now, everybody is negative, right? So just think about it. Everybody, is, when I say negative, I mean, in the operative sense, skew is negative, but I'm also talking about being negative, like they're pessimistic. Um, this doesn't mean the bottom is going to be formed, but if price continues to move sideways, let's say price moves sideways and this maintains, okay, then I know that the continued pessimism is the continued negativity, right? These positioning tools, which are, I think options are a better reflection of more sophisticated participants. I think that it's showing that's already kind of priced in at that point, right? If you see the same concept as like footprint, CVD, all these things, delta, if you continue to see selling, right, but price continues to trade sideways or even trade higher, it's like, okay, like we've seen everything the market has to throw at us and it's not moving down anymore. So if price continues to move sideways and I see that this is maintained, that's fine. But it's early, I think, to say that, because one, price is not continuing to move sideways, it's continuing to move down. So sellers are able to impose themselves on the other side of the market. So this is showing us how negative the market is right now. Okay, futures, right? Pretty flat term structure. I mean, it was flatter going back a week ago, but this is basis. So it's the difference between, your shorter term and longer term contracts. When the market is bullish, you're going to see that those longer term contracts are trading at a much higher premium. You could look at actual premiums, right? So you look at the percentage differences between the near term contracts and the longer term contracts. And, we're looking at this, for example, Binance. Okay, so Binance just, I'm just going to make up a figure, but I know it was close. Binance, for example, going back a couple months ago, your September contract, your further out contracts, trading at like a 15 to maybe 18% premium to your spot contracts. That was sick if you wanted to take that carry trade. Now it's flat. So just because I know there's a lot of new people in the stream and this kind of gets really complicated, think about it. What are your expectations of the future, right? People are selling those futures contracts, okay? Are they hedging? Are they selling them because it doesn't incorporate any kind of interest rate component, no funding? Okay, that's something else to look at. So there's a lot of pessimism there too, all right? Another thing to look at, and this is all positioning, but the one thing that I need to see with this, so for example, funding was briefly negative across the board recently. It's negative and neutral right now. I'd say it's more negative, obviously. Okay. That is an indication of positioning as well. There's a lot of selling there's a lot of selling with the swaps. Okay. So again, the selling though is leading to lower prices. So it's still showing that effort is equal, effort and work is yielding results. You could see that, for example, Coinbase is trading at 844 right now and Bybit's trading at 817. Okay, so actually spot is trading slightly higher. This is what you want to see. Also, you want to see that the spot market is beginning to show up more. Okay, so those are just higher time frame tools that I look at. They're not tools, it's market data. It just gives me an idea of positioning. I want to see that those continued signs of negativity, and this is talking to Sean's question still about predictions based on current data, are those persist, right? And the price is able to hold up. The same way that if I'm looking for a trap or a support to hold, I want to see actually, selling comes in, but price, doesn't have an impact on price. Okay. Can I expand on what I think of Elliott Wave? I think of Elliott Wave as a lot of changes last minute, put it that way. I think there's a lot of convenient changes when things don't work as the person drew them. But I do think, I don't want to just say a negative thing about it. I do think that the market does have sort of people have not changed behavior for thousands and thousands of years. And I think their behaviors are reflected in charts. So I think consistent behaviors are going to lead to consistent results, and those behaviors are going to be reflected on charts in similar fashions over time. But it goes back to Dow theory. It's more with the higher time frame than anything. I think when you apply it to low time frames, it's kind of gets a little bit messy. Okay. Trading platforms. I use, I don't want to say too much, but I use, let me just count right now. I've said it before, but I just feel like sometimes I shouldn't give all this information up. 1, 2, 3, 4. I use 5 exchanges. I use 4 exchanges for one type of product, and I used 1 exchange recently for a different type of product because yeah, I plead the fifth on that too. But if you could kind of assume from that what I'm talking about when I say I use 4 exchanges for one type of product and 1 exchange for a different type, what I'm talking about. Financial instrument. I use multiple exchanges. I like to be spread out. I think all exchanges are great. I don't have anything against anyone who uses a different exchange, or like I said, other than Femex, other than Femex. I think they have the okay. So objectively, Femex has the fastest trading engine. So fastest matching engine of all the exchanges. So you click the button, and there's no other exchange that's faster. But you know, will you notice it? I'm not going to sit here and always as transparent as possible. I think it's noticeable when there's no downtime, but you got to pick exchanges based on your comfort with the exchange, right? So I'm not pushing anything on anybody. We're partners with them for plenty of reasons, put it that way. And I don't mean put it that way like anything alluding to anything like because they're paying us a lot of money. I mean because they're a great team. They are people with integrity. They're really trying to put out great products. They're very receptive. They put on the bracket orders. They listed the new pairs. They're a new exchange. So new exchanges have to make sure that they have all the hatches battened down before they just start pumping out things like FTX, right? With no liquidity and then trading against you. So, LP, that means I sold every position. I only have a few positions open, and they are, so the only positions I have open are some Binance Smart Chain positions that were small projects that it just at this point it wouldn't be meaningful for me to sell it where they currently are. You know what I'm saying? And so yeah, I mean it's like everything across the board that I've ever talked about. So Aave, SNX, Ray, all the main DeFi pairs, I am 100% out of all of them. I'm trying to think right now if I'm in anything besides those small projects on Binance Smart Chain. There's just like 3 of them. But like I said, they're so insignificant. Not to say anything disparaging against the projects, but monetarily speaking. Okay. Drawings work. Do I keep any BTC long-term holdings? So I did have, like I said, a significant what's it called? Cold storage. But what I'm trying to reference is a what's it called? Multi-sig. Excuse me. So yeah, my Bitcoin hit long-term capital gain status. So I sold everything, guys. I'm in cash. That was a tough decision to make because I had multi-sig. The cool thing about multi-sig was on the way up, right? You deposited into multi-sig, geographically separated things, right? So my Bitcoin is still geographically separated, right? Not my Bitcoin, but my some of the USDT I have, but I'm in mostly mostly cash. But the good thing about multi-sig is that when you deposit it, it's very difficult to just sell it at that point. I mean, you'd have to do a few things that kind of get in the way. So on the way up, it was easy to hold, right? But I'm not giving back money. That's one of the rules you should learn. I don't give a fuck about what the long-term promise is of it. If it's going 100x, what is that? Another 2x from here? I do care about it when the chart is showing you that there's evidence to believe that. When things start breaking down, like why am I going to be sitting with hope? Like, nah, man, I'll keep my money. Thanks a lot. There's always another market. Like you could keep sucking on the tit of Bitcoin when it's not giving it anything, but me, I'll wait till it starts giving me some juice again. Sorry about the tit reference. I mean the who knows, the Bitcoin water fountain. Okay. What do you think about FOMC meeting June 15th if they mention tapering QE? I think that, yeah, that's a really important meeting. I think that that is super important. Okay. If there's mentioning of tapering, right? If there's mentioning of any kind of shit, I mean, it would be really bad for all markets, all equity markets, BTC. You'd see a pretty significant response. I don't know if they want to do that though, honestly. So, but that is a really important meeting to pay attention to. You'll see it right away. Just forget the Bitcoin chart, honestly. Take out your S&P chart, take out your ES chart, put the tick chart on the screen, and put the FOMC meeting. Get access to it, right? And yeah, see what the response is by the market. The market's going to tell you how it feels about it right away. Your feelings, what they say, is not going to matter. What the market does, I mean, what they explicitly say matters. Like if they say like, oh, no tapering until 2024, it's like, okay, guys, just chill the fuck out. They just said that again. But if they're kind of unclear, right? If there's any kind of allusion to it, then you're going to see an immediate response. And if you have an edge, if you have a split second, right? If you're in Bitcoin and the ES starts even dumping a split second before, consider that a gift that you have to act on, right? It's like if there is something macro that changes with regard to that, the S&P selling off like 10 seconds before crypto assets, that's like the birds and the animals going inland when a tsunami is coming, right? So you're like at the beach and it's like all these birds start flying over and there's like weird air currents picking up. Okay, don't hang out and continue to drink your pina colada. It's come back and party whenever things are back to friendly conditions. Don't bag hold, guys. Don't bag hold. There's no honor in holding something at a loss. All right, there's no honor in that at all. All right, be smart, be a tactician. Be a killer in the market. Don't and I don't want to talk like that, but and just be like stupid like that. But be very almost like a sociopath about your decisions with trading. Just cut and dry, no emotions. Watch the movie The Accountant. He's not a sociopath, but you know what I'm saying. Do you add to your trades? Yes, I do. Of course. When the opportunity presents. If I'm scalping on the very low time frames, I'm banging in and banging out. It's rare unless I'm intraday momentum trading that I'm adding intraday momentum trading and up. Yeah, so you don't want Bitcoin. So Cornholio, the important thing is though, so there are true differences in, I'm not going to even draw it all the way back by going to the Bitstamp chart, but there are genuine differences in what has taken place in the macro environment with regard to acceptance of Bitcoin and sort of it becoming a macro asset. So there are definitely changes that have occurred, and you can just draw it from here really when Paul Tudor Jones and all those guys got involved. There are definitely changes that have occurred. Listen, Carl Icahn said he wants to get involved with a substantial amount of money. This is the asset class where you have been told multiple times that you could front run a billionaire, that you could front run these people, and they have got involved. And I think we are there, guys. So that's another thing. I don't think we're done. Like, I do think Bitcoin is going over 100,000. I absolutely believe we're going over 100,000. It's a matter of when to me, not a matter of if. Like I've said before, I think that this would have resolved to this anyway without the pandemic or anything. This March, pandemic sell-off, right? I think that this was just shaping up to be a longer accumulation period, and this would have been sort of a right shoulder of your inverse head and shoulders, and this would have led to a longer move up either way. So I think that this could very well set up to be something like this. Maybe we come further down. It moves sideways. I'm not saying that. I think there's no reason to write that off yet, right? So Bitcoin is definitely adopted in a very different fashion. That being said, do you want it to come down to 20K? No, because again, and not for the reason of, you don't want that technical retest. Gold did that technical retest. It didn't work out too well. So, if you look at, we'll go to gold real quick. Gold had that technical retest of a weekly and monthly level, and violated it pretty considerably, or considerably rather. I think that gold, any violation that gold did also, I think Bitcoin probably a little bit more, honestly, because it's that much more reflexive and it's just a different asset. But I don't want to continue to talk about things that that were not necessarily right in front of us. This is in front of us right now. It's a weekly level. Okay, so I think that's the most important thing to focus on. Do you play RSI divergences? No, I don't. I've looked at the RSI in the past. The RSI is just showing us what, put the RSI on. A higher time frame, yeah, I think the RSI is useful. Indicators are just showing you, they're just, indicators are just really functions of price and volume, right? So it's just showing you what you already see. It's showing you the rate of advance. So if we were to do this on this chart and I would say, hey, from here to here, from 1 to 2 leg, okay, would you say it sped up or slowed down? You'd say it's slowed down, right? Now, RSI is going to get thrown off after moving sideways. It's going to get oversold and overbought very quickly. It's almost always going to set itself up for a divergence, all right? RSI is actually, it's a better tool to be used for, some people might say, in ranging markets rather than trending markets, because in trending markets, it's going to constantly give you divergences. But I think that one of the points is that in a trending market on the high time frames, divergences, which are also showing up in price action either way, right? Because what is this showing us? That this momentum has dissipated, has disappeared, right? And you saw that though, big candles, big move, small pullback, smaller, bigger move, bigger pullback, smallest move, a lot of sideways movement, huge pullback. So of course there's going to be a divergence. Indicators, what they do is they make things a little bit more, a little bit clear. They just clear things up a little bit, right? They make the data easier to interpret. It's the same as the TPO though, honestly, right? All I'm doing with the TPO is I'm just crushing the day, like taking the day, squishing into one thing to see, hey, where did we spend the most amount of time? When was the last time you felt this same sentiment during this bull cycle? Never. This is the first time because this is the first time we've had this kind of significant change. The last time the sentiment was like this was in March, but that was a different type of sell-off. That was a really sharp stab. It's almost like you ripped the Band-Aid off. This feels a little bit different. Yeah, I do follow other traders. I mean, I think there's some, you could just go through my following list. A lot of people are shit posters, but yeah, I follow a lot of traders. Of course I do, but I think trying to name them right now would be silly. What I'll do is if you DM me, I'll answer, tell you some traders that are good to follow, but it's all dependent on what kind of trading you're doing. What do you think of Tape Reading and Market Tactics by Humphrey Neal? That's a really old book, I think. I think it's so old that I have it as a collector. Oh my god, that's too funny. All right, so I've kind of I am a like a voracious reader, right? But I buy kind of every book in the subject that I'm interested in, just as like a habit. I think some of the things that I like the most are my books. Like I said, voracious reader, always have been since I was a kid. So I just buy. I bought every, from the time that I started trading. I've just bought kind of every book I could. Same thing when I got interested in. Yeah, just give you an example. Like when I was a wrestler, when I was golfing. I just want to. Hey, I'm interested in something. I'm going to flood myself with information. So naturally, I bought a lot of the classics, right? Some great old books on trading. One of them is Reminiscence of a Stock Operator. A lot of people can relate to the things that are experienced in that book. Tape Reading and Market Tactics. It's a good book, but it is it's how do I put this? It is it's a little obsolete now. It's kind of it's basic. It's very basic, very basic volume analysis. It's not when they're in that tape reading and market analysis, they're not talking about reading this. Not really. It was, I mean, there was a tape back then, but it was not the same. So yeah, it's a good book if you want a super basic rudimentary volume analysis. If you ask me about any book, I probably own it, including some of the most advanced books that I don't even understand. That just I wanted to try to understand them at some point. These are going back like years though. My book collection is extensive, like I said. You should see my Amazon, man. I probably put a good amount of money on. I probably built an Amazon facility for my book purchases alone. Okay. No, Bobby, I'm not in anything. I am in pure cash. I've been in cash since going back all the way up to this is going up to like 45, 46. Yeah. So yeah, at the lows of this range. And remember, I was exiting in February publicly, saying things like paying myself a salary, taking profits here and I was getting shit for it. I was selling at like, I sold at like 47, 52, 50. I think the highest I sold, considerable amount was maybe 52, 53, but you'd have to back check that honestly. But yeah, my average is in the 50s either way. So actually, it might be slightly lower than that because I sold my multi-sig. But yeah, it doesn't matter. I mean, I'm really happy I did. I kept a majority of my profits. But I also have to say that I think I kept a lot of my profits also because I wasn't in a ton of shitcoins, guys. Remember, I don't have strong hands with shitcoins. I'm like notorious for like being in every main pair but never holding it. So remember I was sharing Rune and SNX and Aave when they were nothing in the newsletter. So Hakuna Matata. Yeah, gold does look good on the higher time frames. Yeah, but just gold moves like gold would, right? Melt gold down. Well, actually, pretty sure gold would move. Well, it wouldn't move as fast as Mercury would, but and it is pretty dense. So I would imagine that after the melting point, that it would move slower than something with a lower melting point. But anyway, it is sitting in a nice area. Okay. Did you go over ETH? No, I didn't. I think ETH is just a higher beta BTC right now, guys. I mean, there's a narrative that ETH is, it's going to outperform BTC, but if Bitcoin, it's all depending on if Bitcoin finds its footing. If Bitcoin pukes again, what happened to all those guys that were saying that ETH was the new Bitcoin, yada, yada, yada? Nah, ETH crashed more. It's a higher beta asset. I mean, that's the way the crypto market is right now, guys. I mean, everyone shits on Bitcoin at some point. They're like, it's old news. It's grandpa's stuff. No. Bitcoin, when it moves, it rules the roost. So ETH right now it's struggling against Bitcoin. And if it, and you could just look at the ETH BTC chart, it is, if Bitcoin pukes, do some decent little job down here, but meaning maybe it's setting up an intraday trade. But if it pukes, ETH is going to puke harder. Nothing has changed with that regard. If you want to look at ETH BTC correlations, just look at it. It's like a 0.8. Let's see. Do you think it's a good idea for newer traders to spend a lot of time? I'm going to finish this up after these questions, guys. Looking at naked charts and volume tape reading, just to get, I think it's an absolutely, I think it's, yeah, incredibly beneficial to just watch lower time frame price action, honestly. And yeah, take out a tape if you want, right? I know Footprint's a lot for people, but take out an aggregated tape, open up an agger, separate and open 2 agger trades, right? So agger trade like this right now. I just popped open one for the stream, so it's not separated right now, but open 2 aggers. All right, separate it from futures and spots. Say like have, BitMEX, Binance Futures, Bybits, FTX on one, and then have all the spot exchanges on the other. You don't have to use all of them, right? The meaningful ones. Have those 2. Mark out your higher time frame levels, and when you approach those levels on the low time frames, look at the response and price action. Look at how the tape responds. Do that for 10,000 days and 10,000 nights, and you'll be a great trader. I'm saying that joking around, but I'm serious about the screen time and yeah, just getting an idea of how price behaves on lower time frames. Okay. Yeah, Bobby, I don't know, man. I definitely don't give it specific advice about when the best time to invest in things is. Again, I know people like push that. Like, let me try to ask this. No, I don't. I mean, personally, if Bitcoin doesn't have a floor, none of them have a floor. So I should give like a pretty good indication of what my opinion is on for anything that had strength previously. It's like, I mean, look at Aave. Aave versus Bitcoin, right? It's underperforming BTC. So when it starts outperforming BTC, right? When Bitcoin starts to find a footing, that's when I'll even care about it. But you see what I did? This was my DeFi watch list. There's nothing on it anymore. That's what I do. I clean house. All right, guys, but that does it. Hopefully this has been a really informative stream. I am gonna run now. I gotta get my brother a birthday present, and gonna give away some BTC. So when the video loads, it takes like an hour or 2. Tell me what you thought of the new format. Leave a comment, leave a like, and satisfy those requirements, and I will pick 3 people out of the comments and give away $100 in BTC. And it's very quick. It takes like a day. I get back to you. I tell you won, and you send me your address, and then I send the Bitcoin right away. Okay, guys, it's been a pleasure. On behalf of myself and my partner, Josh Rager, thank you guys for tuning in, and our partners over at Femex. Have a fantastic weekend. Don't get chopped up.